The well-known Tesla bull, Cathy, betrayed Tesla by purchasing some stock in GM after she met GM CEO Mary Barra last year. But if the latest news on General Motors are any indication, Cathy's betrayal is going to cost her dearly this morning. Some new information has come to light that shows points of major struggle for the automaker. These struggles could be a sign of bigger issues to come later this year and into the decade. Cathy's $13 million investment could go to zero. Renowned investment analyst Jim Kramer called this a year ago when
Cathy bought GM shares for the first time, and Kramer's own words, Cathy's support for GM would signify a kiss of death for the company. But before we get deeper, smash that like button and subscribe. The DM is currently offering buyouts to the majority of its U.S. salary workers. That is just the tip of what is lurking within the automaker company. Essentially, DM is looking to cut about $2 billion this year. And one way they're doing this is by offering employees the opportunity to leave. And we've seen this with other automakers, and it was just a week and a half ago that GM announced the elimination. Purchasing fewer cars. It's a difficult situation because DM makes the majority of its revenue from SUVs and trucks, so they are halting production on the one item that is generating the most revenue, legacy. The fact that pickup trucks are the priciest vehicles available, and that automakers like GM depend on them to turn a profit, does not bode well for Cathy and her ARK put money into 2022. In a report outlining the company's most recent transactions, Cathie Wood's ARK Investment Management revealed that it had purchased 158,187 shares of General Motors, GM, for its autonomous technology and robotics ART fund, indicating a shift from its prior position on traditional automakers, of which she had been critical of the acquisition. According to Forbes, is a renowned stock picker who specializes in cutting-edge, about $60 billion worth of assets are managed by tech companies.
Considering investing in GM while remaining open-minded about it. She also stressed the significance of maintaining an open mind and recognizing success. Citing GM's focus on cruise automation and Barr's attempts to turn the company around, this is a significant change from Wood's previous criticism of GM and Ford's plans for electric vehicles, and her prediction that they might go bankrupt again. Given the current state of the economy, it's difficult to ignore the massive slowdowns and layoffs that are
coming for companies like GM. However, the key question is what the next cycle will be and how it will affect automakers. In my opinion, there are two clear contenders for the next cycle, compelling EVs and affordable cars. And with the Fed tightening rates and people struggling to make ends meet, affordability is becoming a major concern. It should come as no surprise that Tesla was the only automaker to expand annually in the US in 2022. This shows that EVs are clearly replacing gas-powered vehicles. And if GM wants to remain relevant in this evolving market, they must adapt and create compelling, affordable EVs. The car has experienced multiple recalls that made it to her buyers, and with production looming and layoffs and pauses, it is evident that they must increase production on their upcoming vehicles, such as the Silverado and the Lyriq Blazer Equinox, which are anticipated to be available in 2024 and 2025. DM has some affordable cars that can help them achieve their goal, such as the Equinox EV, which starts at about $30,000 and is available in the fall of 2023. In the competition for an EV vehicle that is affordable for the typical individual, Tesla is well ahead. When the company's next affordable electric vehicle goes on sale,
Elon Musk, the CEO of Tesla, plans for it to largely function in autonomous driving mode. Musk recently gave an update on the card during an interview at the Morgan Stanley conference, explaining that the company has a clear strategy to make a smaller vehicle that costs about half as much as the Model 3 and will operate almost exclusively in autonomous mode. Musk had previously announced the development of the low-cost EV in 2020, with a target price of about $25,000. Investors had anticipated more information about the vehicle at Tesla's recent Investor Day, but none was shared.
Musk highlighted the importance of autonomy for Tesla and the fastest development of the fully autonomous system, which represents the biggest breakthrough for the carmaker. Kramer mentioned that DM seems to be doing well, but I'm concerned about Cathie Wood's involvement, which could not be good. I believe Cathie Wood is the kiss of death. In a recent CNBC segment, Kramer warned investors not to buy General Motors shares during a recession, stating that there would probably need to be more substantial declines before larger investors started buying a stock. He cited earlier examples of Warren Buffett buying during market bottoms as support. Kramer's remarks come after he recently criticized Palantir Technologies, a company connected to Cathie Wood, dismissing it as a business that probably wouldn't have drawn much attention if Wood hadn't been involved in an episode of Mad Money in January. Jim Kramer suggested that his audience short Cathie Wood and think about purchasing the Total Capital Short Innovation Exchange Traded Fund, ETF, which is intended to wager against Wood's flagship. He attacked ARK Innovation ETF for being the ultimate hedge fund that held traditional growth stocks and featured a drowning scene in the program. But many social media users quickly brought attention to Kramer's earlier remarks from less than a year ago, in which he hailed Wood as a genius at the height of her ETS performance. As legacy automakers struggle with the transition to EVS, a lack of investment in affordable EVS early on may be a contributing factor. Kramer suggested that Wood should stop new investments into fart funds and focus on improving performance. However, Bloomberg senior analyst Eric Balchunas pointed out the irony of Kramer's recommendation on Twitter, pointing out that Wood's ETF had declined by 50 since his initial comment in February 2021. The future of GM and the EV market is unclear, and it is unclear how long their profitability will persist. What do you think about these issues? Tesla, which has made significant investments in reasonably priced EVs, may become the dominating player. Please leave a comment below with your opinions and additionally subscribe. We appreciate your time and hope to see you in the next video.